Welcome to the podcast that will teach you how to successfully invest in and build steady streams of passive income from the highly lucrative niche of mobile home park investing. Veteran real estate investors Kevin Bupp and Charles Dehart from Mobile Home Park Academy will personally share with you the valuable lessons they've learned along their journey as mobile home park investors, so that you too can learn how to build massive cash flow and huge profits from this extremely lucrative niche. So without further ado, let's welcome your hosts for today's show, Kevin Bupp and Charles Dehart.
Welcome, guys and gals, to the Mobile Home Park Academy's weekly podcast, where we'll provide all the information that you need to know to successfully locate, negotiate, close on, and make huge profits from the lucrative niche of mobile home park investing. I'm your host, Kevin Bupp, and in today's show, we're going to be speaking with the founding member of MH Park Advisors, Skyler Liechty. Now, Skyler is a third-generation manufactured home community owner and operator. His in-depth knowledge of the industry as an owner and operator is unparalleled. Now, during his career, he has overseen numerous types of communities, including stabilized, turnarounds, and value-add opportunities. Currently, Skyler oversees the operations of communities located in Texas, Missouri, Oklahoma, Kentucky, and Kansas. This portfolio is comprised of over 2,500 home sites, placing it in the top 100 park operations in North America, with a current market value over $75 million. Now, guys, I'm very excited to get on to the show with Skyler, but before we do, I do have a few housekeeping items I'd like to run through with you. First and foremost, I just want to wish each and every one of you an awesome new year, awesome 2019, and I really hope that through the information shared on this podcast that I can help you achieve your investment goals for the year. And just so you know, I really am here to help each and every one of you. In fact, there are a good number of you already that I've connected with over the years and even partnered with, okay? So we've been doing this show now for going on 3 years. I've connected with a lot of you, talked with a lot of you on the phone, and again, even partnered with a number of you. So here's what I'm here to say. Maybe you're out there, you're hunting for deals and you found something, but maybe it's your first one. You don't have all the capital, you don't have all the expertise, or you don't have a little bit of both of that. We're here for you, okay? I'm here to help you. Maybe you just need some guidance. I can help you with that too. Or maybe you're looking to diversify your investment portfolio and you're considering mobile home parks as an investment vehicle. Well, I've also got the solution for that as well. The bottom line is I want to be a resource for you. And just in case you weren't aware of it, I also host another weekly podcast. It goes by the name of Real Estate Investing for Cash Flow. And on this show, I interview some of the most successful commercial real estate investors in the country. And now, even though it's not mobile home park specific, I can tell you that it's chock full of incredible value, and it's unlike any other real estate podcast out there. Again, we only focus on commercial real estate. I've been doing it for over 5 years now, and I've interviewed some just absolutely spectacular people. And so, again, even if you're not focused on commercial real estate, maybe you only want to deal with mobile home parks, I still guarantee that you're going to be able to extract a ton of value from that show. And basically everything we talk about there is applicable in the mobile home park space. So you need to go have a listen. Now, another quick update I'd like to share with you guys before we get on to the show with Skyler is of the incredible success that we and our partners have been having here at Sunrise Capital Investors, and more specifically in our most recent investment offering, which is MHP Growth and Income Fund 2. Now, we launched this investment fund last May with an initial target capital raise of $10 million, which we fully subscribed in less than 5 weeks. Okay. That was very quick. We had lots of interest in it and have found some great partners that we worked with in that first $10 million tranche. Now, we had a very, very active year. We purchased 8 communities representing over 800 lots. And, we're rolling into 2019 right now, and we've got a strong pipeline. And as most of you guys know, if you've listened to this show for quite some time, that we really pride ourselves in our ability to source strong off-market deals going direct to owners. Okay. We've been building a proprietary database now for over 4 years, and we do a lot of direct mail. We do a lot of cold calling. We've got full-time efforts going, making outreach to owners. And the exciting part about all that is that only one of those 8 communities that we purchased in 2018 was purchased through a broker. Now, I love brokers. We've got lots of friends that are brokers. I'd love to buy more deals through brokers, but the challenge is that there's always someone willing to pay a little bit more than you for that deal. And it's the broker's responsibility to their client to get the highest and best. And I understand that. And that's why we go, for the most part, direct to owner, so that we don't have to compete with other buyers for an opportunity, okay? This is really where we shine. And like I said, with that, we're rolling into 2019 here with a really strong pipeline. And we just recently opened up the second tranche for all those investors that might have missed out on the opportunity to work with us last year in the MHP Growth and Income Fund 2. And guys, I'll tell you that the time is now. While others out there overpaying for multifamily properties or mobile home parks, they're chasing yield. We're actually doing it, right? We're buying great opportunities. And so I'd say if you're an accredited investor who's interested in learning more about partnering with me and my team on future deals, I'd love to have a conversation with you. What you can do is go visit invest.sunrisecapitalinvestors.com. Again, that's invest.sunrisecapitalinvestors.com. And you can create a free account inside our secure investment portal. And inside here, you'll have immediate access to all of our offering docs and webinars, which cover the intimate details of our investment opportunity. And I'll just leave you with this, guys. Based on how fast we filled up that first tranche, that first $10 million that we raised within this fund, I'm very confident that this current opportunity won't last very long. And so I look forward to the opportunity of partnering with you. And lastly, before we get on to the show with Skyler, if you happen to find yourself in the Tampa Bay area, I'd love to connect with you. I'd love to have you stop by the office, meet the team. We're located in the Safety Harbor, which is right across the bay from the Tampa International Airport. So within a 15, 20-minute drive from Tampa Airport, you can be at our office. We'd love to buy you lunch, love to buy you coffee, dinner, whatever you have availability for. So again, if you find yourself traveling through Tampa Bay or you have some extra time while you're here visiting, please reach out to us. What you can do is go to our website, sunrisecapitalinvestors.com, go to the Contact Us page and submit an inquiry. Let us know who you are, when you're going to be in town, and either myself or one of my partners will respond back to you. So without further ado, guys, I'd like to welcome Skyler to the show. Skyler, how you doing today, my friend?
Hey, good, Kevin. Thanks for having me on today. I appreciate it.
Yeah, I know you're super busy. You've got a big operation you guys are running over there in Texas. So I appreciate you taking time out of your day to talk to us and to share a little bit of your story. And maybe how we can start this off, Skyler, just so we can have a better understanding of your background. I gave you a little bit of an intro in the beginning here, but just to better understand who you are as an individual and how you entered into this business, maybe take a few minutes and tell us a little bit about that background.
Yeah, sure. So I'm actually a third generation park owner. My grandfather owned parks. He actually had several brothers who owned parks. The family still owns parks. So back in about 2000, my father and I got involved in the park space here in Texas, somewhere a little bit closer to home. Nothing wrong with the Dakotas, but it's nice to start home, something you can see on a regular basis. So that's how I kind of got into the space. My focus is predominantly on the operation side of things. So, I get to see all the things that happen at the front line of mobile home parks. And so that's kind of where I focus most of my energy on.
Okay. So, and your company, MH Park Advisors, is that the family business or is that a completely different venture from your family?
No, good question. So that's a separate venture. So Mobile Home Park Advisors was set up by me and two of my partners, Greg Rumsey and David Hunt. The focus on MHP Advisors is a couple, which is one, the brokerage. We're all licensed Texas real estate brokers. So we do some brokerage for mobile home parks. It's also where we have our third-party management platform for park owners. Maybe they're having challenges scaling, and it makes sense to shift that responsibility of management onto someone who's been in the space for a while, really understands what's going on. And then that MH Park Advisor is also a consulting piece of it as well. So occasionally we'll get people who are maybe new into the industry, and rather than making the mistakes that we've probably all made when we get into a new space, we kind of shorten the learning curve for them.
Hold their hand a little bit.
That's really yeah, exactly right. Kind of point to the things that maybe aren't as obvious to people kind of getting into the business.
Let's talk about that a little bit. This space has changed in such a big way, even in the short time that we've been in it here, and lots of new folks getting into it. Obviously, it's being talked about, podcasts like our podcast. There's other podcasts out there that speak to mobile home park space. There's people that do trainings on how to invest in mobile home parks. And, 10 years ago, that probably wasn't really the case, right? It was kind of the underground secret society, and it was a really good secret, but now it's out of the bag, right? Everyone knows about it. Big institutional investors that are jumping into this space. And so But let's talk about the new investors, the ones that probably might reach out to you for your consulting services that maybe they've got some experience in another asset class, but they're brand new to the MHS. What are some of the bigger challenges today? And not 5 years ago, but like in today's landscape of the MH space, what are some of the biggest challenges you see new investors facing when they're going to buy that first park?
Yeah, no, that's a good question. So on our consulting piece, like I said, we work with people kind of getting into the space, but we also work with existing park owners. Maybe, they don't stay up with kind of the current trends and what's going on. And I would say the biggest thing or the biggest question we get asked when someone calls us and kind of looking for the consulting piece or maybe the management piece is, they come in and maybe they've heard another podcast, maybe they've gone online and done their own research and they come in, they say, look, I want to go buy a 100-unit mobile home park in a great metroplex, all city utilities, and I think I can pay a 10 cap for it.
Yeah.
Which is not the case. I mean, it's just not the case. So there's a little bit of sharing real world experience of kind of what we see in the marketplace. So once we kind of get through and explain, that maybe 10 or 15 years ago that was the case, but that's certainly not the case today, then we start getting into the questions is, well, we want to buy something with some upside. So we want to buy something with, 80% occupancy, and we're just going to go buy new homes and fill up the last 20%, which that's great if you can do that, but it's not as straightforward as most people think. I mean, it's not just call the manufacturer, order the homes, put them, and then, the field of dreams, if you build it, they will come. It's not quite that simple.
Yeah,
so
I'd like to elaborate on that a little bit. And sorry to interrupt you there, but you're right. I think that is a huge challenge. In theory, the infill process, let's use the example of the 100 space park, 80 lots that are occupied. The other 20 lots are developed. So they've got the infrastructure in place, whatever that means for that particular state or county that it's in.
Mm-hmm.
It's ready. They're ready for homes to be moved on. Now, in theory, that sounds quite simple. You've got programs out there like the 21st Mortgage Program where they'll essentially work with park owners. They'll handle the financing. They'll move it in and literally not have any cost out of pocket. You have some initial costs out of pocket. They'll reimburse you for those expenses of getting it set up and then give you essentially a year to sell it without any cost to you. But now it's your job to, create a sales program within your community so that you can hopefully find a qualified buyer to move into that home. Now, theoretically, that sounds quite easy, but it's really not. And there's lots of moving parts to not only, selecting the right floor plans, picking the right homes, the right price point for your respective community, but then the logistics of actually, working with independent contractors to come in and help with the setup, the movers, the setup, the skirting, the utility hookups, building the decks and all that, all the moving parts. Right. And so that's hard enough. And then the sales side as well. And so doing that on a scale, one might not be all that challenging. Two, more challenging. You start talking about 5 or 10 or the 20 as the example we used. There's lots going on there, and it's much more difficult than what it seems when you first set out. And so what are some of the things you guys have done on your side? Now, and we can talk about maybe it's your individual business, because I know that you guys also, you raise capital, you guys have your own portfolio, pretty significant portfolio of mobile home parks, in addition to your consulting services. But whether it be on your consulting side or within your own portfolio, because I'm assuming you probably still use the same systems and processes,
correct,
with regards to the infill. But how have you guys been able to master that process and create an efficient system out of it?
That's a great question. So I think that the biggest piece of it is really the strategy, right? So, you have to look and you say, as a company or as an investor, what is our game plan here? Are we going to go into a sales program? Are we looking for someone to come in with 10% down and, with a 650 credit score, whatever that credit score has to be, and get financed and we're off the deal and we move to the next one? Or are you of an opinion of a lease with an option or rent to own? And I know, everyone has their opinions about what's a better way. Us personally, we tend to like that lease with an option to purchase program, simply because I think from a operational and a functional standpoint, it's a lot easier if you have a problem with a resident. It's a lot easier to address those things compared to a finance situation where, maybe you end up in a lien holder position, or maybe you have a company like 21st that's a lien holder and you have some type of a guarantee involved. So I think that's once you decide what strategy you're going to go with, then that dictates what the process to execute on that plan is. So for us in our business model, like I said, we really like the lease with an option program. It's been very effective for us. So we traditionally, when we buy new homes, are either going to do a pure equity play. So we have total control of what happens to that home. If we buy it and put in 5 homes into a community, and let's say there's an issue, there's no demand, whatever, it gives us the ability to move those homes around within the portfolio if we want. One of the other programs we really like using is the Cavco has a really good program out there. Again, it's not a no money down type of a deal, but it gives you some optionality. So, if you want to do a lease option or a rent to own or whatever your attorney tells you is the best for your situation, you can do that. You're not in a situation where you have to look for someone to buy the home with 10% down in the credit. And I think generally speaking, and we've used the finance companies like the Triads out there, and occasionally we'll find someone who meets all of their criteria. But, really at the same time, if someone has, let's call it $5,000 in their pocket, they start looking more to a brick and mortar type home. There's some financing options there that certainly don't exist in our space. So, really, I think that the big picture that you have to decide is what are you going to do? And then the second piece of it is velocity. So for us with our program, we have no issue, setting up. At one of our communities right now, we just installed 10 homes. We'll have those 10 homes occupied within the next 2 weeks. And again, that's just, we know we can do it. We know the system. We know the process to do that. So I think that's one of the...
Go ahead. Sorry, didn't mean to interrupt you. You can finish there.
No, so I think that's one of the things that new people get confused is they think, well, if we set a $50,000 home down, on the ground, anyone should have $5,000 to come in and buy it. There's no reason that we shouldn't find all these people to buy it. And that even in markets like the Dallas-Fort Worth market, where we have communities here, arguably one of the hottest markets for manufactured housing, occasionally we find that, but it's more the needle in the haystack type.
Yeah. No, I agree with you. And that's been our experience as well. We do have some higher end communities that they very much are a sales type of community to where it's, today
Sure.
They're 100% resident owned homes. And, any infill that takes place, there's folks that are coming in even sometimes with cash, $70,000, $80,000, $90,000 cash to buy a home. But that's not the norm for us. That's more of an anomaly than anything
Right.
else. I want to talk about the lease option program. I know there's a lot of different variations of it out there. We got SAFE Act and Dodd-Frank that you have to be concerned about with regards to, is it perceived as a owner carry note or not? And,
Right.
we tend to subscribe to the rent credit, which is a very similar, just I think just a different name, slightly different structure to it, but kind of the same end goal, right? And so I wanted to ask you about the new homes. So you guys bring the new homes in. What is the typical term that you'll structure on the lease option? And then the second part of that question is, what is your overall success rate been? Because, our experience with it is most of the time, you get a slightly better, or at least the hopes are that you get a slightly better resident, someone that's got a little bit more of an owner mentality.
Yeah.
But it's still a very high default rate as far as meaning, do they make it through the entire program or not? So, but what has been your experience? Because you guys own communities in actually a lot of different states than what we do. So every market's very specific and unique to itself in terms of the profile of the buyer and ultimately what your overall success rate is. So what has been your guys' experience?
Yeah, that's a great question. And it really is market dependent. Some markets have a higher stick rate. Some have a lower stick rate. Usually we're finding is, somewhere on the brand new home, kind of that first person in the home is going to be around 20 or 25% are going to stick with it for the term. Or what we've actually started seeing happening is we put people on a lease option and maybe they have someone in the family who passes away, leave them a small inheritance, and they come in and buy it with cash. Or one of the other things we've seen is people actually have borrowed from their retirement accounts to buy it. I'm not an expert on that, but I know that that's happened before. So probably like every portfolio, you have some churn in there. Usually that second person who's in the home, the stick rate is a little bit higher. Price of the home's a little bit lower. So as you get down, maybe you have the third or fourth person in the home. That's a much higher stick rate, just simply because the price point is different than the new home. And usually in our tenants, and I'm sure like your tenants, it's best efforts to screen them, make sure their income is where it should be, all those criteria. But even with that, we'll have people who typically, when we have someone who moves out of the home, it's usually related to they had a job transfer. Maybe they lost their job and they're moving in with other family. So it's usually life events that drive that more so than hey, I've been in the home for 5 years and it doesn't have that quote new smell to it anymore. Mm-hmm. That's usually the exception to have someone who just wants that constant new home.
Yeah, got it. And what do you guys typically require as far as like the downstroke, down payment to move in on a lease option or option deposit, whatever you want to call it?
Yeah, so good question. So typically for someone to move into one of our new homes, again, this is very market dependent, mm-hmm. but it's going to be anywhere from $2,000 up to $5,000. And that is a strict security deposit. So that's one of the other things that we've structured, which is our lease option it's a pure lease and we have a segregated option contract. So if someone leases a home and a year from now they say, hey, I got a job transfer, I need to move. If they leave the home in the condition that they found it in, that deposit is fully refundable. So what we found that does for us is as those life events happen for people, they're more inclined to leave the home in good shape because there's that potential to get their deposit back and we don't do this, but we've heard some people who say, well, what you put down is non-refundable. And the problem I see with that is someone moves because of a job or whatever it may be. If they have no possibility to get their money back, what's their incentive to give it back to you in the shape they found it? It's pretty low.
Yeah, no, you make a good point there. It's interesting to hear all the different structures that are out there. Everyone does something a little different than the next, and I think that it's not one way is better than the other. As you mentioned, it's very market dependent, and I think you almost have to you have to test a few things, and figure out what's going to work best for you and your operational structure within your business. And so that's very interesting to hear. Yeah,
right. And I'll tell you, speaking of market dependent, we had a community we actually sold about 18 months ago. And it was in a market that was predominantly a renter market. So we had a 180 unit community. We had 55 park-owned homes, and the lease option strategy didn't work for us. So it was all rentals. So again, that's kind of a different model, but in some markets, I think park owners may find that they're in rental markets. So, which is okay. It's just operationally, it's a different animal, so to speak.
What's the opportunity for the end buyer in a scenario like that? And I know our industry has evolved. 5 years ago, lenders wouldn't touch a park that had that many park-owned homes in it, if any, right? I mean, they were very kind of tiptoeing around the fact that, they didn't want to be in the rental business, so they didn't want to lend on a park that was in the rental business. That's changed a good bit. I mean, literally every year, it seems like most of these larger lenders are being a little more open-minded about it. Even Fannie Mae, Freddie Mac, they keep kind of pushing their percentages up that can be the total number of park-owned homes in a community. So the end buyer in that scenario, was there a challenge for them to get financing with that many park-owned homes?
No, it wasn't a challenge. I mean, we're buying a small park right now here in the Dallas Metroplex, and it's 95% park-owned homes. And we have a lender who's not only going to loan on the park, but also going to give us credit for the homes. Now, these are older homes, so they don't look at a income approach on it. It's more of an NADA type evaluation on the homes. But again, it's something that 5 years ago, I would have never found a lender. We wouldn't have ever had a lender that would even entertain giving us any credit for existing homes.
So in that scenario, you guys would essentially go through and put an NADA value on each one of those homes, because obviously that's going to be tied up in the note in the mortgage as well. And there would have to be some type of release provision in that mortgage so that you could, should someone come in and say, hey, I want to buy this home from you on lot 3 for $5,000, you can release that from the mortgage, correct?
Yeah, that's right.
Got it. Well, let's, kind of tying into the topic of, lease options or just infill, right? You're driving customers and consumers to your mobile home park. Because that's really, there's so many different components of having a successful mobile home community, the right market, the right community, the right infrastructure, the right systems and processes, being able to infill, but then also on the backside, actually being able to, drive leads to the community, leads of folks that either want to rent, want to do a lease option, and want to buy, whoever that profile is of that buyer that you're looking to attract. And I know that you guys, you and another partner had started a company called MHC Leads.com to address that issue. So maybe you can speak that a little bit, because there's so many challenges that new people face getting into this space, and there's not a lot of resources out there. There's just not, and so a lot of it's kind of
there's not
trial by fire. And so again, one of the challenges we've gone through is not necessarily driving leads, because Craigslist and the litany of other sites that are out there, if you can be consistent with making posts and then actually having a mechanism that can handle the inbound traffic, you're fine. But actually putting that in place is a challenge in and of itself. And so maybe talk to MHC Leads a little bit and what that service is and how it can help folks in the industry.
Yeah, sure. So really the MHC Leads came out of our challenges we were facing on site. So one of the things that we constantly dealt with is, number one, the on-site manager would tell us, hey, I'm doing all the ads, I'm doing the Craigslist and the Zillow and all the others, and I'm getting zero traffic. No one's picking up the phone. So we spent a lot of time working on our copy. So now we know that our copy, our ads work. They bring a lot of leads in. The second challenge we faced with on-site, once they were using our copy, was, hey, Skyler, I'm getting so many calls. I'm talking to people all the time on the phone. I had 15 showings this week and 0 leases came from it. We said, then there's a problem, because there's no reason that you should get that amount of volume and showings and get no leads or no leases out of it. And we said, well, tell us where these leads are coming from. Well, I don't know. I have all this stuff going on. So that was kind of our two of our main struggles, which was, where are the leads coming from, so we can double down on these sources that are working. And number two, how do we handle all of the inbound calls and emails and all of those things? And for anyone who is working on an infill, the issue that we ran into with the amount of lead volume was managers would call and say, hey, Skyler, I haven't been able to do any collections the last 2 weeks because I've been so busy on the phone and showings, I just don't have time to do it. Now, maybe that was the case. Maybe that wasn't the case. But we said, okay, there's got to be a better way of doing it. So that's really the MHC Leads was kind of brought about through those pains that we were having on site. So what we actually started finding was most people they may call, they may email, but the biggest communication source we found was text messages. Most people get hundreds of junk email a day. So they're less likely to respond to email marketing or emailing back and forth. But the text message, most people open their text before they'll open an email. I mean, there's some research out there online that says that text messages have a 98% open rate. Emails only have a 20% open rate. Mm-hmm. So again, we started saying, okay, there's a shifting where people would much rather text back and forth compared to sending an email or making a call. I'll just send a text, see what it's all about, what you have, what you're offering. So MHC Leads is really a text-based artificial intelligence system. It focuses predominantly on lead qualification. So that's the biggest piece of it. So you get 100 people that call about your 10 homes that are available. Through our system, it whittles that down, and maybe you end up with 40 of those people that meet the criteria of the property. They, know that you're going to do a background check. They know, what you're looking for on the downstroke. They know what you're going to be asking them before they even show up, before a manager calls them and tries to schedule an appointment. Like anything, most people, when they're looking at a new place, they're not just looking at your place. They're looking at, 10 different places. So the challenge then became, how do you get to those people immediately? because the first person to respond is going to be the person that they're likely going to set the appointment with.
Mm-hmm.
So that's really what the system is geared to do. Immediate response. It communicates back and forth through that artificial intelligence piece with the person. So at the end of that communication, the on-site manager knows this is, Sally Smith. Here's her phone number. She is fully qualified. All the manager has to do is call them, set up an appointment. They don't have to spend time on, oh, well, they didn't know that you needed $2,000 to move in. Oh, they didn't know we were going to do a background check. It takes all of those problems out of the equation. So at the end of the day, you'll have, let's say in that scenario, you have 40 qualified people. Well, not every one of them is going to return a call to the manager. They may have already found somewhere else that's closer to their work, or maybe an apartment offered a move-in incentive, or whatever the case may be. But of the people that we schedule to go and tour the home, we find that we have about a 70% to 80% closing rate, kind of depending on the community.
And this would, just real quick, this would also assume that it's probably more of like a lease option, or do you have clients that actually utilize this for straight sales as well?
Yeah, so we have clients who utilize this for straight sales. Okay. And again, it's kind of the needle in the haystack because they want 10% down, good credit, those types of things. It will work for that, but we found that an average client on an average month is going to get somewhere between 20 and 40 qualified leads. Of those, you should be setting up about half of them to come in to see the unit, right? So that same program with a straight home sales, it's going to cut it down by about 70%. So you're going to be about 30% of the people. Again, I think that's just a product of if someone has reasonable credit, they have 10% down, they're more likely going to be looking kind of in that traditional brick and mortar home in most markets, not every market, but in most markets, that's kind of what we find. So again, still works for that, but it's just a lower volume because you're looking for a more narrow client. I mean, same thing with if you have a 3-bedroom, 2-bath, 16 by 80, you appeal to a lot more people than if you have a 14 by 50,
sure,
2-bedroom, right?
Yep, absolutely.
So, and then I'll say the other thing we found as we started working with clients early on in the MHC Leads process was most on-site managers don't have a really great handle on the advertising piece of it, the marketing. You can tell them go to Craigslist, go to Zillow, but that's not enough. Like we did a beta test with a client and said, okay, you have your manager on one of your communities, do it for a month, see what the volume is, and let us do the advertising piece. And when we did it, we got about 9 times the amount of leads.
Wow.
And I think that's just a product of the copy, right? Not all copy is the same. And most park owners are so busy focused on, how am I going to scale up? Where's the next deal going to come from? Who's going to do the due diligence? All those things that it takes to grow the company. Most of them don't focus on what should my copy look like? And certainly even fewer think, okay, what are the, in the consumer's mind, what are the cognitive biases at play? What things should I say? How should I say it? I mean, I'll give you an example of that. So one of the things that we do is we kind of play on what's called a commitment bias. So essentially, if someone commits to something, it takes a lot of mental energy to get them to change their mind. So when we put them through the system, if they're qualified, we have someone from our corporate office just call them, hey, Sally, glad you set up an appointment. I'm just confirming and make sure you're going to be there. Do you have any other questions I can answer? Mm-hmm. Then we're going to have the on-site manager call them at the end of the day or the next day and just say, hey, Sally, really looking forward to you coming here. I'll have you down for tomorrow at 2 p.m. Is that still when you're going to be here? So it's just getting someone to recommit that they are going to be there. That's something that we look at, we analyze, we work through. But I would say a lot of park owners, they just don't have the time to sit down and say, what else is at play here to really get the most of each lead?
Yeah, or just the general bandwidth available, the ability to do it. I mean, you only have so much time in a day, right? We all have the same amount of time. And if that owner's out there looking for more properties, looking to grow their portfolio, there's limited time in the day to spend on this, right? If this is your only focus, right, one community, and that's all you did, 40 to 60 hours a week, then maybe you can manage that yourself. But right, if you're trying to grow a company, that's surely not going to get you there the fastest. Hey guys, Kevin Bupp here with Sunrise Capital Investors. As you are hopefully already well aware if you've been a listener for any period of time, my goal has always been to provide you with as much value as I possibly can through my two podcasts, Real Estate Investing for Cash Flow and the Mobile Home Park Investing Podcast. As our audience continues to grow, literally, we've been downloaded millions of times by folks in over 125 countries. I've had thousands of people reach out looking to get involved in our niche. And that's the phenomenal niche of mobile home park investing. For those that don't know, I've been a full-time real estate investor for nearly 20 years now, and I've personally invested in and have owned apartment complexes, various commercial properties, hundreds of single-family rentals, and I've interviewed some of the most successful investors in just about every other asset class, and I've arrived at this one very simple conclusion. Mobile home parks are hands down the best investment I've found to date. Why? They provide investors with the best risk-adjusted returns out of any other real estate sector that I've seen. Investing in real estate can get complicated, and I really want to simplify this process for you. If you're someone who wants to diversify away from the uncertainty of Wall Street and allocate a percentage of your real estate portfolio to mobile home parks, but maybe you don't have the time nor the inclination to personally locate good deals yourself, then our team will do it for you. At Sunrise Capital Investors, our team specializes in the acquisitions and management of undervalued and highly profitable mobile home parks. And we are now providing accredited investors with an opportunity to participate directly alongside our team in our up-and-coming deals. And let me say this, I believe that we are hands down the best in our space at sourcing highly profitable off-market deals. That's really what makes us unique in this niche and as investment managers. As stewards of your capital, we truly are aligned with our investors. We've structured our investment fund so that we as a company are incentivized in the same way the investor is, which is through the performance of the investment itself. In addition, we want to make sure that we not only make money for our investors, but that they understand how it's being made. That's why we provide our accredited partners with a private monthly podcast that walks them through the detailed updates on how their investment is performing. And we're very transparent, providing you with the good, the bad, and the ugly at times. And so if you'd like to learn more about the partnership opportunities with our team here at Sunrise, please go visit sunrisecapitalinvestors.com and click on the investors link to get signed up. It's absolutely free and you'll get placed on the priority list of when new opportunities come along. Also, feel free to call us at 833-CASH-FLOW without the O. Again, that's 833-CASH-FLOW without the O. And one of our investor relations team members will help you schedule an appointment to speak with one of our managing principals. If you have questions, go ahead and schedule a call and let's get on the phone and talk. And with that, guys, I like to leave with one last thought. From the time that I wake up in the morning till the time that I lay my head down the rest of the evening, my number one priority with everything I do, whether it be recording this podcast, working for our investors, helping each of you reach your investment goals, to providing a great experience to each of our residents who reside in our communities, is to add huge amounts of value to everyone that I come in contact with. Now, with that being said, I look forward to the opportunity of bringing value to you through Sunrise and through this podcast. Thank you for your time. Now, let's go ahead and get back to the show. I want to talk about and we don't have to go too deep in the weeds here. If anyone has an interest, they can surely reach out to you. They can go to the website, which is MHCLeads.com. But I wanted to talk about how this might integrate with, some of the more common rental management softwares. Like we use Rent Manager. Does this integrate directly with like a Rent Manager or other similar type of management softwares? Or how is the calendar, whatever calendar it is, integrated with the system so that obviously being the park owner, we can kind of see we can track things, we can see activity, we can see, conversion rates. And then on the park manager side, the community manager side, that they're getting updates regarding, appointment set and, reminders and such.
Yeah, no, that's a good question. So we've looked into we're also on Rent Manager. So we've looked into what's called API integration into Rent Manager. Mm-hmm. I think that's something that may be down the road. The challenge is when we looked at integrating, it's okay, well, if we have 100 people who reach out on this ad, do you want 100 prospects in Rent Manager? Well, no, probably not. Okay, well, of the qualified people, those 40 in that example, do you want all 40 in it? Well, probably not, because if the manager can't get a hold of them, if they don't show up for an appointment, how much value is there in that lead? Mm-hmm. I'm of the opinion that there's not a lot of value. So what we're doing right now is the system, when you have a qualified prospect, it can send an email or a text message to either your on-site manager or to the owner and the on-site manager. So again, that's a little bit of how you want to track things with your manager. We can tell you how we do it and what we think best practices are. But as far as us tracking those, I think that's best left to the park owner to determine if they just want the manager to run with it. Maybe you have a superstar manager that no worries, they'll do everything. And we've seen occasionally we'll run into a client who has a great manager. They're on top of it. They're calling the prospect back, this and that. More common what we find though is, we'll send 5 or 10 qualified leads in a week to a manager. And we ask the owner, hey, how did those leads turn out? Because again, we want to be involved in that success, because if we can't add value to a customer, then they don't need to be on our system, right? If we can't benefit you, no reason for you to be signed up with us. Usually what we find though is the manager says, well, yeah, I was real busy this week, so I didn't call any of them. Or yeah, I called them 2 days after they were qualified. And again, kind of goes back to that piece. When people are looking for a home or a place to live or an apartment, wherever it is, it's immediate. They are looking right now. You call them 2 days later, it's not a hot lead anymore. It's pointless to have those. So again, that's the piece we use, which is that text or the email to multiple parties. And then internally, a park owner can track it and schedule it on whatever calendar they like to schedule it on.
Got it. Well, that sounds very interesting. And folks, again, go to mhcleads.com to learn more, to reach out to Skyler to get some more information about the system that they have there. And so I want to switch gears a little bit, Skyler, and I know we're coming up on time here shortly. So there's definitely a few more things I want to get in with you here today on the call. Let's talk about your investment side of your business, and I'm more so on the acquisition side. I know that one of the biggest challenges I see, again, and not necessarily even new investors, just guys that are in this space, even us, right? I mean, we're really good about creating deal flow. We do a lot of work with a lot of brokers, do a lot of direct owner marketing, we cold call, we send mailers, we do everything, right? I mean, like we try to hit all the stops. Yeah. And it still takes a lot of energy to create high quality deal flow, especially in such a competitive landscape that we're in. As we mentioned in the beginning of the show, there's a lot more interest for our space. It's a good and a bad thing, right? It's kind of a double-edged sword. I think it's good because it really helps facilitate better lending options, as we talked about. Banks are, banks that wouldn't have been interested in the space 5 years ago are, the lending, like the terms are a lot better, a lot more attractive than what they would have been 5 years ago. In addition to that, I also think that it's nice that there's some larger institutional guys in the space, because it creates a larger exit opportunity for the guys like you and us that want to own 10, 20, 50 parks, right? Whereas 15, 20 years ago, if you had a large portfolio, you'd probably have to sell it off in chunks or individually. You wouldn't be able to find someone that had $500 million to come in and take it off your hands. Now that's out there, that exists. But cap rates are being driven down, and that's again, it's a double-edged sword. But how are you guys finding your opportunities nowadays? I mean, what is the primary, I guess, path that you're taking to the most recent opportunities that you guys have added to your portfolio?
Yeah, great question. So the biggest way is for us, which is, most of the park owners we have in the markets we want to be in, we have relationships with. I tend to believe that most transactions are relationship driven. I mean, I think there's a lot of on-market stuff that sells, but I think there's probably 2 to 3 times off-market deals that trade compared to the on-market. I think that's just a product of there are people who don't want the world to know that they're selling their community, or maybe they don't want anyone to know that they own a mobile home community. Maybe they like their huge office building with the marble entryway, and that's what everyone knows about them. I mean, so there's a lot of reasons that people are motivated to do off-market stuff. So because of that, I mean, 98% of our deal flow is literally me and my 2 partners calling park owners, talking to them about selling directly to us. People we've known for a long time. Usually those type of relationship-driven transactions are, as you can imagine, they are kicked off by some type of a life event. Maybe it's death, maybe it's a divorce, maybe it's a major health issue. I think the mobile home park space lends itself to people operating until they can't operate anymore, until they die. I mean, it's not a business that at 65 you're done, you got to get out of it. So again, some of the park owners we're working with right now that we're kind of trailing in our acquisition pipeline are in their 80s. Okay, so they're getting close to when they're going to have to do something either for maybe estate planning or, maybe it's a death, whatever the situation is. But yeah, that's most of our deal flow is directly from, the owner to us. It makes it, in most situations, it kind of smooths out some of the communication errors that can occur if you have a third party in between trying to bring the two groups together.
Mm-hmm.
You get on the phone, you call the owner or talk to them directly. One of the deals we're closing on this week, actually it's 2 parks we're buying. We had an appraisal issue. I don't have to call someone in between and say, hey, you got to explain to the owner, here's what their options are. I just pick up the phone, call them. Hey, here's what we got going on with the appraisal. How do we want to handle? How do we want to deal with it? I say that also saying, and I think I mentioned early on, myself and my 2 partners were all Texas brokers. So we broker parks as well. But again, I think most of our deal flow is just coming from existing relationships or people that we happen to catch on the right day.
Yeah. And again, there's pros and cons with everything. And we do a lot of direct to owner, transactions. In fact, majority of our transactions are just like yours. I mean, they're relationship based, but there are some downsides to that. I'd say that one of the downsides would be that, setting expectations properly sometimes and actually not having that mediator, which typically is a broker. A good broker is a great mediator involved in the process.
Right.
When a situation arises like an appraisal that comes in, a couple $100,000 short or, $500,000 short or whatever it might be, the seller, if you're dealing directly with them, they might take it as, hey, you're trying to get one over on me, and you're trying to, get a retrade done here and buy this community for $500,000 less than what I think it's worth or what I know it's worth. Whereas if there's a broker involved there, now there's a kind of an unbiased third party that should be looking out for the best interest of the seller, maybe not the buyer, because maybe the buyer is by someone else. So I've seen it kind of go both ways.
Right.
And in any event, just want to throw that out there that it's a consideration. That doesn't mean that you're always going to get the best deal by going direct to owner, but it surely is sounds like it's a preference for you guys. And it's also the preference for us. And it's also more enjoyable. Actually, I thoroughly enjoy getting to know a lot of these park owners. In fact, you'll find that if you take the time and spend a little bit of effort, you'll uncover the real story. A lot of these folks have built these communities with their own bare hands. It's generational.
Mm-hmm.
Maybe it was something they built with their father growing up, and they've got fond memories of being in the park. And there's a lot of storyline that goes along with these communities, and there's a lot of rich family history that exists there as well. And so that to me is enjoyable. Like it's a very rewarding part of the business. I don't know if you feel that way or not, but that's one of the reasons I really enjoy this industry.
Yeah, no, you're exactly right. Most park owners are very, very interesting when you get to know them. Kind of it's funny. One of the park owners that we are working on and kind of building a relationship, and at some point we hope to buy this person's community. The joke is it doesn't take a rocket scientist to run a mobile home park. But actually, this park owner used to work at NASA, so kind of always found that interesting.
That's pretty funny.
No, Kevin, to your point, with brokers being kind of a third party, a neutral in between, you point out a lot of great benefits of that, which is simply some owners think that if you come with an appraisal issue, you're just carving them, where a broker has a lot of comps they can bring into play, and well, no, you're looking at this wrong, and those type of things. And you're exactly right. That is helpful. And we have bought deals with brokers, and it has been very helpful. They've provided some of those pieces that sometimes principal to principal you could miss out on.
Mm-hmm.
And again, I think you also have some park owners who feel like if they don't go to a national broker and have it advertised everywhere, that they're leaving money on the table.
Mm-hmm.
Now, whether that's right or wrong, I'm not sure. But I would say that there are going to be deals that trade that will not trade without a perceived independent person involved.
Yeah, I found that there's 2 different profiles of a seller, and we're both park owners, and we have been sellers as well. Is that either you will always use a broker, because whether you don't want to be inconvenienced or you just want to rely on someone that you feel has a higher knowledge base of what the market should demand for your community, or you'll never deal with a broker because you feel like they're going to make a fee for doing no work whatsoever, right? You've got a completely different take on it. And like you'd rather deal with a buyer directly and really don't want to get engaged with a broker for maybe that reason I just mentioned or a multitude of others. But I feel like there's really two distinct profiles of property owners out there. At least that's what I've experienced. It's either they love brokers and they'll only work with a broker, or they don't want anything to do with a broker.
I think that's right. And, we, like I mentioned, we broker deals as well. And, anyone who has not been sitting in that seat can't appreciate, the beatings that the broker frequently has to take when they're delivering the news back and forth. So it can be a challenge kind of being that in-between person. So it's, the park owners who kind of are of that mindset, hey, they get a fee for doing nothing, I think is probably not necessarily, it's certainly not the experience I've experienced.
Yeah, no, me either. But I feel like some folks in the industry feel that way. And I don't think it's just mobile home park owners. I think it just exists. I know that.
No, you're right. You're right.
Yeah. And it just, what are they doing for that 5 or 6%, which equates to typically hundreds of thousands of dollars in our space based on the size of the transactions. But in any event, I don't feel that way. And I've got a lot of great broker friends and a lot of great relationships with brokers and have done transactions with many of them. So with that, and I truly admire what it is you guys do, because you do have a lot of work on your side, and there's lots of behind the scenes stuff that goes into the equation that a lot of the folks on the front end don't really see. They don't get to experience. So with that, one last question here before we wrap things up, Skyler. We've talked about a lot of things. We covered a lot of different bases here today, but I want to leave this with one last question, and it's more to help folks get that one last golden nugget of advice. And it's really about the biggest mistake that you might have made along your time in this industry. I want you to think of it from the perspective of an owner, of an investor actually owning and operating communities. What would you say if you had to pick one? I know if we're not making mistakes on a regular basis, we're not growing, right? Like that's truly how I feel, right? Yep. You can't advance in life or in business if you're not making mistakes and learning from them. But what would you say would be the largest mistake that you've made in this business? And ultimately, how'd you overcome it?
Yeah, that's a great question. We probably on a weekly basis make one mistake or another, and it provides a good growing opportunity. So I would say the thing that comes to mind is relying on information that's online and taking it as fact, right? So one of our early deals we bought, kind of the conventional wisdom was, if you have a good looking park and you work with all the dealers, the street dealers, they're going to help you fill up the park. And that isn't really the case. It's certainly not the case now. Maybe it was, 20, 30 years ago, but right now that's not the case. I think for us, the biggest takeaway was, look, you that's fine. Maybe you'll get a move in from someone buying a new home. Maybe someone moves from another state, but really to drive value, you got to have a plan to put homes in, to fill them up quickly. And the quickest way to do that is with equity or some flexible debt options.
Mm-hmm. Yeah, no, that's fantastic. That's great advice, Skyler. And again, it's been an absolute pleasure having here on the show. And I think we covered a lot of ground here and hit a lot of different angles. And again, a ton of value that you brought to the table. And that's really derives from, 3 generations in the business, right? Like it's kind of hard. I mean, you came out of the womb into the MH industry, which is kind of interesting. It's not that old of an industry, like it's one of the younger industries when you really think about it and you compare it to the other commercial asset classes out there, other than self-storage. Really, it is basically, I don't know if it's younger or I think it's older than self-storage by probably a couple decades. But in any event, it's an exciting industry, lots of fun, very lucrative if you can get your ducks in a row and get some very strong systems and processes in place. And as we mentioned beginning the show, Skyler, his group MHP Advisors, they offer a litany of different services and resources to the industry. So you can learn more about them by going to their website and read a little bit more about the services they provide by going to mhpadvisors.com. And in addition to that, the other company that Skyler is also a founder of, which is MHCLeads.com, as we talked about, driving, that lead generation machine and bringing qualified customers or consumers to your mobile home park, right? Like there's multiple different pieces to this operation. And if you get everything down, but you don't get the sales or the leasing side down, then you fail miserably. So you've got to get all the ingredients in place. And it sounds like this might be a great option for those folks that are out there that just find themselves stretched beyond their bandwidth, or either relying on their on-site manager to post Craigslist ads and to basically do it consistently and qualify the leads that are coming in, which sometimes you'll hit one out of the park and get a really good manager, and other times it's fairly mediocre and you can't expect too much. But it sounds like this might solve that problem as well. And so, Skyler, with that, we're going to wrap this thing up here. Again, really appreciate you coming on the show. It's been an absolute pleasure.
Thanks for having me, Kevin. I appreciate it.
All right. Well, guys, that's all we have for today's episode. But real quick, before we wrap things up here, I want to remind you of the free gift that we offer to all of you listeners who take the time to leave a rating and review on iTunes. Basically, as a way to show our thanks and gratitude, we're going to give you the exact cold call script that we use in our very own business here at Sunrise Capital Investors. And I'll tell you that we buy a large majority of our properties from direct to owner efforts, and that consists of direct mail and also cold calling. And so if you're serious about getting started in this business, or maybe growing your portfolio, maybe you're already an owner, but you want to grow your portfolio, then you really should be cold calling park owners directly and building those relationships like Skyler and I had talked about earlier. And so here's how you're going to redeem that free gift from us. After you submit that review on iTunes, just go ahead and send us an email to gift@mobilehomeparkacademy.com and tell us who you are and what screen name that you use to leave that review. And we'll go ahead and email you that cold call script immediately. You can also stop by the Mobile Home Park Academy website at mobilehomeparkacademy.com and you listen to all the previous podcast episodes that we have out there. We've got a ton. I think we're either nearing 100 or just crossed over 100. So lots of information, hours upon hours of great interviews like the one we did here with Skyler today. Just a litany of information about being in this business, being an operator in this business, and all the things that come along with that. In addition to the podcast that we have hosted there, we also have a copy of our popular book called The 21 Biggest Mistakes Investors Make When Purchasing Their First Mobile Home Park and How to Avoid Them. You can download this for free. I'd say that this is an absolute read. It's a very easy read. You can probably breeze through it in less than an hour. And it will really, open your eyes a little bit to some of those challenges that you could ultimately avoid if you have a little bit of knowledge before diving into this space. So go ahead and grab that book. And guys, again, thank you for stopping by and joining us here at the Mobile Home Park Investing Podcast. And this is your host, Kevin Bupp, signing off.
Congratulations for taking the necessary steps to achieving massive success through the highly lucrative niche of mobile home park investing. Be sure to visit our website, mobilehomeparkacademy.com, to download your free digital ebook version of the 21 biggest mistakes investors make when buying their first mobile home park and how you can avoid them. And while you're there, be sure to subscribe to our free monthly mobile home park investing newsletter, which is jammed full of valuable tips, tricks, and strategies to help you accelerate your path to success as a mobile home park investor. More information about this podcast and its hosts can be found by visiting mobilehomeparkacademy.com.